Today we had a very volatile day in the stock market and we closed right on top of some very critical support levels. First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright. Today SPY was up 0.27% and it was a very volatile day for SPY because at one point we were trading down here near 390 and at one point we were trading all the way up here at 399. So we had a $9 swing in this candle and we closed right on top of this critical support zone right here at the 200 daily moving average at 393. So 393 remains a very solid risk level because below that is when price action will be below all of the moving averages and then we can start seeing some very impulsive selling. However, if buyers continue to step in between 390 and 393, you cannot rule out the possibility that SPY is still trying to come up here and close this gap at 408. Now, while that may be hard to picture and that may be fundamentally impossible for you to imagine, price action will do whatever it wants, and that's why it's important to let the price action do all the talking. So what I'm trying to tell you is there is a lot of fear out there in this market, and usually fear means the market is going to move in the opposite direction to what you expect. There's a lot of people that are bearish right now, and rightfully so, but that does not guarantee the market is going to go lower. So if you want to get bearish, wait till SPY starts breaking down below this support zone, and then we will likely break down below 390 and come down here towards 385 and 380. If we continue much lower, we hit the December lows around 377, and that is going to be a very critical support because if we break that, we're likely going back into a bear market, which means we can retest the October lows, which is a long ways lower into the 350s. So this is a very critical support and a very important time to stay focused and make sure you have a very solid trade plan no matter where price goes from here. Critical upside resistance will remain this critical support at 400 because above 400 then we have little resistance up until we close the gap at 408. Today we were up 1.19% on the NASDAQ 100 triple Qs. And just like SPY, we had plenty of intraday volatility hitting that full range of resistance up here right around 313 all the way down to this critical support zone right around 307. So when you look at the triple Qs, there's a very obvious indecision point with the doji close, and we are still above very critical support in a short-term bull trend. If you zoom out, we even have a longer-term bull trend from the 260 lows back in December all the way up to the March lows right around 288, and now we're breaking out near the highs around 312. So as you can tell, the big tech sector is not getting the weakness from a lot of the financial sector stocks that are continuing to sell off, and that is giving relative strength in the triple Qs. Price actions above all of the moving averages, and all of these moving averages are positively sloping and fully stacked to support a bull trend. That doesn't guarantee we have to go higher, and of course we need to see price action breaking to a higher high above 312. But what I'm trying to tell you is if we break above 312, it is a very quick trip up to fill that gap at 322 because there is very little resistance above. So you're getting exceptionally bullish in the triple Qs if we get the bull breakout, and you're getting a lot more cautious if we lose this support zone at 305 to 307. Below that support, we're likely coming back down to 300 in a hurry, and 300 is the neckline breakout of the higher high on the daily chart, so that is also going to be critical support. If we lose 300, then we're likely rolling over, and this is going to start looking like a double top from 312, but we'll cross that bridge when it happens, and we'll wait for the price action to confirm it. So right now in the triple Qs, you have some very critical support right here at 305 to 307 and very critical resistance at 312. On the Dow Jones, we were up 0.21% today, and the Dow Jones hit that critical resistance zone between 324 and 327 and found resistance at the negatively sloping 20 daily moving average. The Dow Jones is very simple because you're not getting bullish until we can start breaking out above 327 to 328, and then we should start marching higher towards the resistance at 335. A rejection from here sends us back down towards critical support at 317, and a break of that support closes the gap at 311. On the Russell 2000 IWM ETF, we were down 0.81%, and the small caps are looking absolutely horrible here, but I do think we're getting closer to a bottom the lower we go at this level. When you look at the small caps, we are breaking down below the December lows, but we are currently finding support at the bear market resistance trend line, which is now support around 168. If we bounce from here, it is very possible to get a counter trend rally back up to close the gap at 181. So even though we are in a downtrend, it does look like we're closer to a counter trend move, which is actually going to be short-term bullish. So from 168 to 170, you can take on risk for a retest of 177 to the gap close at 181. And if we break support at 168, then you're looking for a retest of the October to September lows in 164. On the ARKK ETF, we were down 1.54% today, continuing that rejection from what could be a double top rejection from 40.5, which means if we break down below the neckline at 36, we should easily come down here and close the gap below 32. I drew this before and I'll draw it again, but that would be a very quick trip on a break below 36 to go close that gap. So for that reason, there's critical resistance at 39 and 40.5, which means you should not be getting bullish unless we can see price breaking above those levels. On the VIX, we were up 1.66% as the VIX is bouncing from that support yet again, which is right around 20, and the VIX closed above 22 yet again. Now tomorrow is Friday, and if we're going to see the VIX crushing, it is typically going to happen on a Friday, so watch the VIX very closely. And if we close the VIX down below 20, we are likely going to get a bull breakout in the triple Qs. On Bitcoin, we're currently up 3.21% as Bitcoin is trying to fight off that rejection yesterday, and we're right back up to the critical resistance zone at 28,000. We need to break 28,000 to get to my next price target at 30,000, but if we're going to get rejected in Bitcoin, it is likely going to be from resistance back down to the breakout, which is that support around 25,000. On Google stock, we were up 2.16% today, so we continue to see strength in the big tech sector, but we're currently sitting right here at resistance at 106. We need to break this resistance to get to the next target higher, which is the gap to that 110. And as you can tell, these Bollinger Bands are expanding, so it will be possible to go straight there. If we get rejected from 106, look for a retest of the support breakout at 102. On Amazon stock, we were up 0.1%, so we went absolutely nowhere, and all Amazon is doing is trying to buy time while these Bollinger Bands expand, trying to hold up above this critical support at 98. If we break down below 98, then we're likely coming back down towards 94 to 95, but if we bounce from 98 and break above critical resistance at 102, I do think we're going to see impulsive buying up to fill the gap at 109 and then 115. On Microsoft stock, we were up 1.97% today, and Microsoft did get the bull breakout, which was that resistance above 274, and we did close with a doji. And from here above 274, it looks like we're going to try to push up and close that gap just above 285. So it can be bullish above 274 for the gap close at 285. And if we break below 274, look for support right around 272 to 267. On Nvidia stock, we were up 2.73% today as this bear killer of a stock continues to blow off the top, closing outside the upper Bollinger Band today. I do think Nvidia is closer to a near-term top than it is likely going to continue to climb higher. So I am skeptical that this stock is about to roll over and try to come back down towards support right around 258. Doesn't mean I'm right, so follow price action, and on a break above 274, the next target higher will be 282.5. On Tesla stock, we were up 0.56% today, and Tesla is struggling around this resistance at 197, but still finding support at the 20 daily moving average at 188. If we get rejected again, we're likely coming down to fill the gap at 186, and we have critical support at 183 and 173. A break above 197 should send us to 208. On Apple stock, we were up 0.7% today as Apple is trying to climb higher with this inverse head and shoulders look that should take us to 163 and then 170. Stay bullish as long as we're above 156 because it's as simple as that's the neckline breakout, so that's your critical support level. On the financial sector, we were down 0.67% today, continuing lower below all of the moving averages with the bear trend, but I do think it's possible the financials are trying to double bottom from this support zone, but wait for price action to confirm it with a bounce and a break back over the 5 EMA. On the industrials, we were down 0.29% as the industrials also could be trying to double bottom, but very likely going to hit my price target right here at 95 because we still do have the bear trend. The healthcare sector was down 0.19%, continuing from that rejection from the resistance at 128 and down back below all the moving averages with a bear trend. Look for that support level down here right around 124 and the critical resistance remains 129. On the energy sector, we were down 1.39% as we did close the gap at 78 and then some, and we're getting very close to coming back down towards the support at 76 before we break down and go close the gap at 73. So jumping back over to the S&P 500, as you can tell, this is a very volatile market and it's full of fear. And usually when you get a fearful market, it is possible you get the pain trade and we go against the majority and go higher. Obviously, anything is possible, and there's still the possibility of plenty of black swan events, so follow price action and manage your risk around critical support. As I always say, never get bearish when you're at critical support. Wait for that support level to break down and then you can short below that support level using it as resistance. If you want to come trade with other price action traders and get access to all of my intraday updates and analysis, come join us over at the Stocks Channel Trading Discord community, which you can find out how to join by clicking on the link in the description of this video. I also have my own trade alert service called Bank Trade Alerts that will send you all of your buy and sell alerts directly via email and text message, and only trades the ETFs TQQQ and SQQQ. You can find out how to join Bank by clicking on the link below. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.